Everyone, and welcome to my morning report analysis videos on Wednesday the 17th of January with me, Richard Perry, market analyst at Hantec Markets. Are we in the process of a turnaround in the two key factors I think that have played out in the markets in the opening weeks of 2018? We've had throughout the recent days we've had dollar weakness and massive equity market strength in Wall Street, but are these beginning to show signs of a turnaround? What we've got is equity markets which have fallen back and a bit of a dollar rebound today. Now I'll show you the S&P 500, which opened sharply higher but actually closed lower on the day yesterday, and that's beginning to sort of show signs potentially of a bit of a turnaround, certainly on momentum indicators, which are looking pretty stretched, and Bollinger Bands on a technical basis as well stretched. We could start to see a bit of profit taking possibly, so watch out for those Wall Street markets as they open up. Now we've also got a big turnaround in the dollar, big rebound overnight. Now that has first of all, the thing that sort of played on the minds of Wall Street traders was overnight the sort of suggestion that there might be a possibility of a US government shutdown on Friday, and that sort of saw VIX volatility spike sharply higher yesterday. And a little bit down today, so that's sort of helped to support the markets. But yeah, interesting to watch that again. But this dollar has rebounded as the euro has come under a bit of corrective pressure, as the suggestion that perhaps the SDP in Germany are not 100% convinced about this coalition agreement with Angela Merkel's Christian Democrats. So it'll be interesting again to see how that plays out, but certainly that has helped to sort of stabilise the dollar selling pressure, and showing a few signals on these forex pairs that I will show you in a bit to really suggest that perhaps there is a dollar turnaround. A few signs maybe that could be on the cards, but nothing yet confirmed. But as I said today, we're seeing equity markets still ticking lower. Big volatility moves on the DAX yesterday. FTSE 100, which is my chart of the day, showing signs of exhaustion and rolling over. And yeah, across the board, pretty much on these forex majors, we're seeing the dollar rebounding, although not against the Aussie dollar, interestingly enough. We're also got potential for a bit of a sort of stalling of this rally on the oil price. It'll be interesting to see if oil starts to roll over. 63.10, 63.05 is that support on WTI. If that breaks the downside, that completes a small top pattern. So again, watch out for that. But moving into today, what are we looking out for? Well, we've got the final Eurozone inflation data. No changes expected there. 1.4% on the headline, 0.9% on the core. Industrial production for the States, 0.3% positive, and also the Bank of Canada monetary policy this afternoon. So nothing too significant, but the Bank of Canada is forecast to hike rates by 25 basis points to 1.25%, and it'll be interesting to see how hawkish they sort of set their ground, because some analysts are looking for another couple, maybe even three rate hikes this year. So yeah, it'll be interesting to see how the Bank of Canada play this one out. But my chart of the day is the FTSE 100, which, as I said, is showing signs of rolling over. We've had this strong uptrend, which has now been broken in the last few days. Two negative candles in a row. That's not really been seen since mid-December, when this uptrend was starting to get going. But seems to be a third one today, and falling below yesterday's low, 77.40. That's been broken to the downside, and you're seeing these momentum indicators just rolling over. The MACD line is ready to cross lower. The stochastics have crossed lower, not yet confirmed on a sell signal. The RSI has back from 70, and if it drops below 60, that would be a signal as well. So if this does start to correct, then you're looking at an initial sort of basis of support around about sort of 76.90 area as your sort of initial sort of bit of a old resistance became new support, but then 76 big figure could well be the retreating point. So you can see on this hourly chart, whereby the market has rolled over, you've got all these sort of moving averages where the 55-hour moving average had been supportive throughout that trend higher is now rolled over to the downside. You've got the momentum indicators, the hourly RSI below 40, the hourly MACD lines now coming back to neutral. Are these going to be turning negative? That would be the question you'd be asking, and then sort of starting to use intraday rallies as a chance to sell. So not a million miles off sort of really rolling over. And then you're sort of looking at all these reaction lows. So you've got 77.16 and as I said 76.92, which was the reaction low last week, within a little bit of a consolidation. So just sort of losing the trend higher. Interesting that we've had 77.92, 77.93 being a basis of resistance in the last sort of couple of last few sessions. And yeah, the market does seem to be rolling over, doesn't it? Could start to do that retracement. So interesting moves on equity markets in Europe. I will speak to you later, and I wish you good luck in your trading.